morning, guys, and listen, welcome to your market report for this Thursday. Thursday, the 10th of May, 2018. And listen, we're going to get right into the markets. We're going to start the charts right here. The first thing we're going to take a look at is silver, the silver price. The silver's been up this morning. It's been following the dollar. Now, if you heard me talking yesterday, I said silver's heading back up to 17 bucks. This is the exact move. This is the move I was expecting. It's faltering a little bit because oil just faltered a little bit. Oil price just faltered, and we see the silver price falter just a little bit. It touched 1670, and then it started faltering. Now let's take a look at oil, and let me show you. Okay, this is oil right this second faltering a little bit. It's down a little bit, say, but I don't think this is something that's going to continue for very long. And I think if you see this falter in the oil price, coincides with the falter in the silver price, and it also coincides with the falter in the dollar. So we take a look at the dollar real quick right here. You see the falter in the dollar all simultaneously, and the reason why is because of the inverse relationship between oil, the dollar, and gold and silver. If you understand how this works, if you get oil prices going up, that means you can buy less oil with the dollar. This is why they call it the petrodollar. They call it the petrodollar because it's only worth how much oil you can buy with it. This is why it's so important, the yuan futures contracts, oil's futures contracts. This is why it's so important that that's a move that's going to kill the dollar. This is the whole reason why these trade tariffs were put in place against China a few weeks ago. America is throwing a threat out there. Hey, you know what? You guys continue with these yuan oil futures contracts, and we're going to find some way of punitive against you, because this is going to ultimately destroy the dollar. Because the dollar is only worth what it's worth in oil. So if you see the price of oil going up, it's going to put pressure on the dollar to go down. As simple as that. So you see today the dollar making its move down back toward 91, where I said it's going to head to. Now, I also said when it gets down to 91, you're going to see the silver price. So now moving back to the silver price, you're going to see it move up to a range probably around 17 to 1720 when the dollar moves back down. Dollar strength means silver and gold weakness. It also, the inverse relationship with oil, dollar strength is oil weakness. So they wanted to strengthen the dollar a few years back. So the first thing they did was they took gold and silver and they manipulated the price downwards. They smashed gold and silver. This propped up the dollar. But it only worked for a while, and it stopped working after a couple of years of doing it. So then they needed more because the dollar was weakening and losing strength. So what they decided to do was they funded. They got tremendous money they can work with through different proxies, the government. And they funded through the banking system and everything else. They worked through the big banks. They funded these shale oil wells and shale oil production. And they turned America quite literally into an oil producer again. And what they did was they drove the price of oil down. They knew this was what was going to happen when they did it. They knew that they were going to drive the price of oil down. They drove it down successfully all the way down to 29 bucks a barrel. This supported the dollar tremendously. The dollar went up the whole time, all the way up to 103 on the U.S. dollar index. They couldn't keep this going forever because there's not unlimited oil out there, and especially when you're working with shale wells. What happens is they have an expiry time, almost like the food in your grocery store. You know, they put a stamp on it that says expires on such and such a date. You just can't leave it there forever. You know, well, shale oil wells expire, and you have to go down. You have to repump the oil in the shale oil wells to get it back coming out again. And so if you do they call this the Red Queen, the expiry of the shale oil wells. It's called the Red Queen. Anyway, the whole thing was about propping up the dollar. And ultimately, the dollar is going to very rapidly now become the big loser in the end. The reason why is these yuan oil futures contracts are going to slowly destroy the dollar, and America's absolutely desperate. Should I say that the possible next step is to actually go to war? Seriously, to try to stop this, because they've threatened China already with economic sanctions, not sanctions, but economic tariffs, and it doesn't seem to be going a whole lot of anywhere. Also, China's pushing them really hard right now over there in Korea. They're threatening to unify Korea, and that would mean that the troops, 28,000 troops stationed there, would probably have to leave. A unified Korea is America's worst nightmare, I'll tell you the truth. Not for the people out there who say, hey, you know what, this is wonderful, oh, Korea's given up their nuclear weapons. And all. This is what you see on the surface. Look beneath the scenes. Look at what the actual forces and the powers that be actually think about a unified North and South Korea, and an actual real peace coming to that area. This is their worst nightmare come true, you know, and this gives China. This is China's dream come true. This is part of their manifest destiny, you know, and they just are gaining ground in the South China Sea, which is a plum. There's tremendous amounts of oil and reserves and everything underneath that South China Sea, where they're building these temporary islands and everything around the Spratly Islands areas and everything. So we got a lot going on in the world. Geopolitically, there's a war that's already, it's almost broken out completely, but it's not quite, between Israel and Iran right now. There's a lot going on. Anyway, let's move on with the charts. We've done silver. We can see that that it's trying to move back up to a range of around $17, and I think it's probably going to be successful. Now, what about Bitcoin? Bitcoin today, $9,363 at Bitstamp. And we see Bitcoin staying very solid in around this price. It must have a lot of support in around 8,900 bucks, you know, and that must be what's going on. And it's got resistance in at 10,000. And so what Bitcoin's done is it's found a range in around 9,300 bucks for now. This is a short-term range until the stock market does something. So now let's take a look at the stock market. It's up 88 points on the day. You know, and the stock market's found a range too. The range is here between 25,709. That's where it meets resistance, and it meets support at 23,000. And it's found that range in between them two, and it's just following that range. Probably the high side is probably once it breaks above 25,000. And I think it possibly could, but then you're going to hit resistance on this line right up here, you know. Anyway, that's what the stock market's doing, and it's kind of a little bit boring right now, the stock market, because it's no real big action in the stock market. That's because there's no real big action right now in the bond market. The bond market seems to have hit a little bit of resistance. Okay, we've looked at oil. Let's look at bonds. The U.S. 10-year, you know, it's down today for no apparent reason. It touched 3%. Yeah, last night I was watching it. It touched 3%. Let's go to the U.S. 10-year here. The bond rates the yields are falling. There's no real apparent reason why right now, other than there's some buyer out there. There's a buyer, a mystery buyer. And at this point, I got to level with you guys. I'm not sure who the mystery buyer is. But there's a mystery buyer in the bonds, and or buyers, and I'm going to hold reservation back as to who I think it could be. And I know you guys are out there shouting probably, it's the government, it's the Fed buying the bonds, but not necessarily. It could be that it's the fact that when yields get high, we get buyers moving in. But if it is buyers moving in when yields get high, chasing yield, we're going to run out of them after a while, and the bonds are just going to keep coming and coming and coming. And so we're going to have to wait and see who the buyer actually is. And ultimately, I think that if the Fed continues this policy, it's going to drain too much liquidity out of the system, and we're going to have a market crash. Everything's down to the Fed. The Fed could stop the market crash, and then we'll go straight into hyperinflation. How would you like that if the Fed stops the market crash? If the Fed continues with their policies, then we're going to have our market crash, and then what will happen is we'll go through a short deflationary period, and then we'll go into hyperinflation. So both roads in the end lead to hyperinflation. The Fed's boxed into a trap. It doesn't matter which way they go. They can go north or they can go south, right? Now, if they go south with this, well, some of my predictions are going to fail because we won't have our market crash. The Fed said that they're going to go north. So for them to go south, they're going to have to lie to me. You know, they're going to have to lie to all of us. And they'll have to be the buyer of these bonds, and they'll have to actually change their monetary policy and not do what they said they're going to do, not do their quantitative tightening. So that would be them going south. If they go north, we're going to have our market crash. But either way, both roads in the end lead to hyperinflation. You know, it's just that one road would probably take a little bit longer to get there. And so that's what we're watching for right now. And so now let's move to the cryptocurrency market capitalizations. We're looking at everything mostly in the top coins being in the green right now. But not by much. $439 billion, Bitcoin dominance 36.4%. So there's not a whole lot of movement in these markets today. Oh, look, they changed the symbol of Tron. Now it's red. Okay. Minus 2.1% Tron. IOTA's down too. IOTA's down quite a bit, down 3.22% today. These top coins up here are all up, all the top 6, Litecoin included, but they're only up marginally. And there's no real big movers. Bitcoin Cash is a 6% mover, which is pretty good. It's one of your bigger movers today at $1,662. Ethereum $765. So there's not a whole lot really going on with the coin market today. Some are up and some are down. It's a little bit of a mixed bag. Now, dollar index. Dollar index is down, like I say, 92.71. I'm expecting it to move down to 91. The dollar index right now. And then I'm expecting silver to go back up to 17. So anyway, listen, thank you guys for listening to this market report. And we'll catch you on the very next market report tomorrow. Friday's the last market report before the weekend. And then, well, springtime, you know, so we got a lot going on there, barbecues and stuff. Thank you guys for listening. Bye-bye for now.